All right, dividend growth stock investors, it's Colby the DGI Crab, and you know what time it is. Every other Tuesday, do a video on the great dividend ETF race. We are up to episode 5. And if you're new to the series, what we're doing here is we're taking 8 very popular dividend themed ETFs and investing just $5 each into those every single week. The purpose of the series is to show that absolutely anyone can invest and start piling up that good passive dividend income with a minimal amount of money and not a lot of knowledge or even desire to track individual stocks. So, hey, y'all, there's no excuse. Get an account set up. Start investing in an ETF or a couple of ETFs, or maybe even 8 ETFs for all I care. But let's just start getting some money in the market, building up passive income. We've got a Vanguard quartet of VYM, VYMI, VIG, and VBR, and then one each from some of the major Vanguard competitors. You got Schwab's SCHD, State Street's SPYD, iShares DGRO, and Wisdom Tree's DHS. Now, I'm not a licensed professional financial advisor, so you should always do your own due diligence before investing in any stock or ETF. These are just my opinions, but I hope they give you at least some ideas for some things that you can do with your investments. So the way that I handle this is I'm utilizing the Sofi app for this particular strategy. This is my side brokerage, if you will, and I thought it would be ideal to put the funds in here and see how they go. SoFi makes it very easy to automate investments, so if you wanted to do something similar, for as little as $5, you can invest in any security that you want, and you can set it up to recur every week or every day or every couple of weeks, whatever frequency that you choose. So if you really want to be passive about it, you can take a little bit of time up front to go in and set it up, and then, hey, you don't even have to touch it again, and the dividends are going to reinvest automatically for you. So here are the 8 ETFs. Been doing this now for 10 weeks. So I've got $50 invested into each of the 8 ETFs. So nice little milestone there. And also, before we jump in any further, I have made the offer. If any of you are interested in signing up for SoFi, I don't pitch referral links on any of my videos, but I will say in this series, um, there's a referral link in all my videos down in the description below. If you use my link and sign up for SoFi, what you can do is send me an email to dgicrab@yahoo.com, and you can tell me what you would like me to invest my referral bonus money into. And I will purchase whatever that is, and I will hold it forever. Well, at least until retirement age. Maybe when I'm up at 59, 60 years old, maybe at that point I might sell it, but I'm not going to sell it for a very long time, no matter what it does. And I had the first person take me up on that offer a couple of weeks ago. I just got that referral money in, and that viewer's name is Michael, and Michael requested that I purchase Lamb Research, stock ticker LRCX. So I'll take a quick peek at Lamb Research and see what that company's all about. But you can see I got a $75 referral bonus. Thank you very much, Michael. Michael confirmed he got his bonus as well. And it's down a couple of bucks already, Michael, but hey, that's okay, because as we all know, when it comes to dividend growth stock investing, it's not about the short term, it's about long-term results. I think Lamb looks like a pretty good one. So, okay, what I'm going to do here is we're gonna hop over here to the spreadsheet. I track this stuff in the spreadsheet here separately. Just I like to kind of keep things all in one spot here, so we can sort of see how things are coming along. And I'll do a quick sort here for the day. I haven't sorted it just yet, but let's take a look at the value, largest to smallest. SPYD, the State Street's high dividend yield ETF, is still on top, you guys. Those high yield stocks are doing pretty good this year in an up market. I'm actually a little surprised by that. I figured that in a market where tech's done so great this year, finance has done great this year, real estate's just not done particularly well, although it's recovering. I really figured that the higher yield stuff would be maybe lagging behind some of the more growth centered things like DGRO or VIG, or even the small cap stuff like VBR. But the high yield stuff is just absolutely crushing, and the two highest yielding stocks, well, I guess VYMI, the international, is the highest starting yield of all of these, but of our American ETF themes here, SPYD and DHS are performing the best right now. Now, because I started this right at the beginning of July, we didn't get any of those second quarter dividend payouts from any of these ETFs. So still to this point, the only dividends collected have been the dividends paid out by DHS, which is the only one that pays monthly. We've gotten 22 cents worth of dividends from DHS thus far. Later on this month, we're going to get our first round of dividend payments from the other 7. So that'll be exciting, and definitely getting to the point now where we're building up some fairly decent positions here. We're up overall. Markets continue to be really hot. $400 total dollars invested for a current value of $414.82. So we're getting some pretty good price appreciation. We're up about 3.5% in a short amount of time, and up to $12.65 in annual forward dividend income with a yield on cost of 3.16%. So definitely feeling good about this portfolio still, because dividend growth stock investors are weird, and a lot of the times we like red in the market as opposed to green. I certainly wouldn't mind seeing a bit of a market correction, seeing some of these things go down in value. So when I make my $5 investments, I can get larger amount of partial shares. Because, man, every single week, I think at this point, when I make my round of $5 purchases, I'm bringing my average cost on all of these up. Now, I don't like that very much when I'm doing that with stocks, but hey, with ETFs, getting that diversification, and it's not about timing the market, it's about time in the market, as the saying goes, and it is absolutely, positively true. And I'm excited to continue to do this series, and I hope that you'll all see as we go along here. You'll be able to take a look at the playlist. I put all of these videos in their own playlist, and at some point, months down the line, you may go back and look at episode 1 and just see how this started, and what a small amount of money it was to begin with. But again, that really does not matter, because it's not about just having a bunch of money appear on your doorstep one day, investing into the market and having all of this passive income coming in. You've got to be consistent. You've got to be patient. Patience and perseverance accomplish all things. Now, that's going to conclude the great ETF race for episode 5, but a little bit of bonus content here, I suppose. I do want to just quickly hop over to Seeking Alpha and take a quick look at LRCX, Lamb Research Corporation. Let's see what the viewer here had me buying. I got $75 invested into this thing. Share price is really high. Hey, I'd like to see maybe a 10 for 1 stock split on that thing here. Then I'd have a full share or close to it. Let's see here. So we have a current dividend yield of 1.12%. Nice low payout ratio here, 26.4%, with a 9-year dividend growth rate and a 5-year average of 12.7%. Okay, well, hey, I like the starting yield of a little above 1% with a 12% plus dividend growth rate. Definitely a compounder. This would be the kind of stock that I would put in the tier 1 category for the 18 to 30-year-old investors that have plenty of time in the market to let those dividends compound. If I check the price history here, let's see, up 9% in the last year, up 261% over the last 5 years. Michael, I definitely see why you like this one. Got a big market cap here, $106.6 billion. So certainly a stock that'll be firmly ensconced in the S&P 500. Lot to like here about this. A lot to like about Lam Research. Last thing I'm going to check here real quick is dividend history. Okay, so they have just paid a dividend for 9 years. So they're fairly new in that regard, and they have increased it every year for those 9 years. So we might be not exactly on the ground floor, but still in the early stages of a company that may well become a dividend aristocrat here in the next 16 in the next 16 years, 15, 16 years. Started out at 18 cents a quarter, jumped to 30, 45. Big jump here in 2018. It goes from 50 cents a quarter to $1.10. That is an epic jump. A little slower the next year, 110 to 115, 115 to 130, 130 to 150, 172 and a half, $2. The last time from $2 up to $2.30. Okay. Hey, great pick. Definitely happy to own this one. It's not a stock that's in my 4 tiers, but that's all right, Michael. It looks like this is a really good company, and I'm going to be excited to hold this one for a while, reinvest those dividends, and see how things play out. Final thing to add on that referral bonus. Click on the link in the description below. Sign up for Sofi. You've got to put money in the account in order to receive your bonus or for me to receive mine. But if you get all that set up properly, then you should receive your bonus within a week, week and a half. And then, because they don't give it out instantly, they got to make sure that there's not like bots or whatever signing up for accounts, collecting bonuses and jumping back out again. So you got to be patient with that. But send me an email, dgicrab@yahoo.com, if you do so, and let me know what you would like me to invest the money in. I only have 2 conditions. Condition 1, I don't want it to be any of the 8 ETFs here in the Great Dividend ETF race. I would like that to be consistent at just $5 each a week into each of those. I don't want to throw off the balance. And then second of all, whatever it is that you have me buy, it just needs to pay a dividend. All right, I'm not going to buy anything that's just growth that doesn't pay out a dividend. So, as much as I like stuff like Chipotle or Amazon or Berkshire Hathaway, they don't pay out a dividend. Great stocks, but this is a dividend growth investing channel, so I want it to pay out a dividend. And that's it. It could be some other ETF that you like. It could be a single stock. Could be part of the 60 stocks that I cover on the channel, or it might be, like Michael picked, something different, which is fine as well. It gave me something new to learn about and research. So, hey guys, that's the video here for today. Thank you so much for tuning in and keeping track of this race with me. And if you've got any questions about dividend growth investing or just investing in general, shoot me over that email, dgicrab@yahoo.com. I will always respond to you with an email, but if it's something that requires more than maybe a sentence or two worth of an answer, I may make a video on it as well. I'm starting to get a little bit backed up, actually, with videos that I need to make in regards to viewer questions, and I love it. It's my favorite kind of content to produce, so keep those questions coming, y'all. More than happy to engage with you. I want this to be an interactive channel where I can teach you some things, you can give me some of your perspectives, and we can all learn together and become better dividend growth investors together. Take care, everybody. I will see you on the next one.